Welcome, everybody, to the Chinchilla Pickin' Podcast. It is October the 5th, 2025 at 4:02 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I'm good. How about you?
I am doing fantastic. It was such a great day today. I looked up to see what is special about October 5th. And I found out that it is National Do Something Nice Day. So
Oh,
I
okay.
want to say, Brandon, you look fantastic today.
Thank you.
You're welcome,
David,
man.
you look awesome also. Good job.
Nice, great. Look at that. Look at us being nice to each other for once. I just by chance wanted to see whose birthdays it was, famous people. And I got a small list here. You ready?
Yeah, sure.
All right.
It's
It is Kate
you. It's
Winslet's
yours.
Kate Winslet's birthday on October 5th.
All right.
Guy Pearce, you know who they are? Jesse Eisenberg, ring a
Yeah.
bell?
Yeah.
Okay, got one. Travis Kelsey, it
Okay.
says
Yeah.
there.
Duh.
Steve Miller, the Steve Miller Band.
Yeah.
You're old,
I love Steve Miller.
yeah, you're an old school music guy.
Yeah.
And I got on this list Bernie Mac. Bernie Mac was born October
Nice.
5th, back
Nice.
in the day, yeah. And of course, the most important of them all, myself. Happy birthday to me. I mean,
Good job.
when you own your own company and we do a podcast, I get to say happy birthday to myself on it, right? That's
Yeah.
how
Happy
that
birthday.
works.
Good job. Good job getting born.
Good job being born. Way to go. Um, yes, birthday time. And I couldn't think of a better use of my time than to spend it with Brandon talking stocks. I could do this every day with Brandon, but then we wouldn't have anything to talk about come Sunday. So I'm glad we only do it once a week because otherwise we would sit here and talk for hours and hours and hours. You know
How
what? You know
old
what?
are you?
How old
Don't
are
tell
you?
me. I've never known this. I've just had my estimations.
You you know I'm older than you,
Yeah.
and that's all you need to know. So,
What
um,
year did you graduate high school?
don't worry. Why do you need to why worry about this kind of pointless information? Um, I will say this. When people talk to me, right, and I always come across as this joyful, uplifting, I guess. I don't know. This is what I think I come across as
Yeah.
this
Yeah.
aloof, apateful individual who is very,
Appleful?
I don't know. I'm trying,
Apathetic.
whatever. I
That's
try to
not
be
even,
funny, positive,
not really.
uplifting, encouraging to everybody I meet in my life because I want any interaction to be with me. I try to make someone else's life positive in any way I can, shape or form, right? I go on runs, and when I do, I give random strangers high fives. I mean, that's just who I am, right? But then when people actually stop and have a conversation to me with me about certain things, you can tell I completely change and I get really energetic and passionate about it. And one of those things is stocks and investments. And when someone starts talking to me about stocks and investments, I tell you what, I change and I just could go on and on and on and on for hours. And it's the life of the party, let me tell you. Everybody the whole party just like, oh my gosh, shut that guy up. Um, but that's one of the things that I am passionate about, and I love doing this, and I love doing this every single Sunday with you, Brandon. Even though some Sundays we completely disagree, we're at opposite ends of the spectrum, and then other Sundays we agree on everything.
Right.
And I couldn't imagine a better use of my time, honestly, than coming here and having these discussions with you. So
Yeah, me either.
I appreciate it, man. Happy
Yeah.
birthday. All right, enough about that. Let's get into it. It was a pretty quiet. We had the government shutdown. Let's talk about the government shutdown. Do you want to, or do you want me to pause and let's do the introduction first? Then I'm going to ask you
Yeah,
about government
fine.
shutdown.
Fine.
All right, introduction. Rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You actually hear the live back and forth, the bicker and the banter right here on the show for you. Brandon, we have to talk about it because everybody's talking about it on CNBC, Bloomberg, everywhere you go, they're talking about it. We have to at least spend 1 minute. How does this affect our investments at all, if any? Government shutdown, go.
If things go down and they become a good value, then you buy them.
That's my
It
thought
doesn't
too.
affect
Like,
my thesis in any way.
and that was what I wanted you to say without me trying to like, lead you into that because I completely agree. It doesn't change any of my investments whatsoever. It just what it does is some stocks will go down and it like Brandon said, it provides a buying opportunity or if you already own them, it provides an opportunity to buy them at a discount and lower your cost average.
Right.
That's what this provides. It's always the longest one was what, 40 days? 45 days, something like that. That was a while ago. That was the longest one, and most of them are a week, 2 weeks, and then we're back open again.
And we survive.
And we
And
all
we're
survived, and
fine.
everything was fine.
Because there's a group of 550 some odd politicians in Washington that have somehow convinced us that we need them. And they actually, we really don't. We'll probably be better off without them. Just saying.
So, from an investment standpoint, stock standpoint, I don't see any real meaningful difference to any of the companies that we have talked about that I currently own or that I watch based off of this shutdown news. And even if it continues for a few more weeks, I don't see any meaningful difference in anything I own.
No, me either.
Now, there probably could be some stock out there or some company out there that is, you know, really affected by this, but I don't follow them, I don't own them, and I haven't talked about them on the show.
Yeah. Government contractors might fall over
They might
shutdowns.
hurt.
And you
Yeah.
might get a decent shot at Northrop Grumman or Raytheon or one of the,
No,
one
they're
of those.
defense. Defense is national security. That's going to continue.
Well, that's true, but you're probably not going to see any increases to the budget over that period of time. But
There you
it
go.
doesn't affect my thesis at all. And
There you go.
anyway,
That's our 1 minute on government shutdown.
yeah, good.
There you go. Back
And
now,
we
back
kept
to
it
actual
PG.
back to actual stocks and investments. Here we go, Brandon. Take it away like usual.
All right. Well, Nike reported earnings last week, and it was okay. It was okay earnings. I mean, they beat on both the top line and the bottom line. There was revenue growth of 1% globally. I think it was like 4%, 5% in the United States, somewhere around there. That was a surprise. We didn't expect revenue growth. On a constant currency basis, it probably would have evened out to being about flat, but revenue growth was good to see. It was. Um,
How was the
pro-
conference? See, that's where I'm going to ask. You know the question I was going to ask because I ask you every time you talk about Nike. I bring this up every time you talk about Nike. I want to know. You know where I'm going to go, so I'm going to give you time to get there. I'm going to leave you. I'm going to keep quiet. I'm going to mute my mic, and I'm going to leave you time to get there.
okay. Well, there was a 320 point basis contraction in gross margin, but that was kind of to be expected because they're building out their wholesale channel. Again, they're rebuilding their partnerships with wholesale and pulling back from the direct to consumer. Direct to consumer is a higher margin business. So they were clearing out some inventory. There's an inventory reduction of about 2%, which was also an upward surprise in a nice way. Um, and So you saw the inventory reduction, the wholesale channel increase in sales led to a 320% or 320 basis point decline in gross margin. Um, the direct to consumer, which they were focusing on heavily, that was taking their focus on away from the stores. Give me a second, Dave. Geez, you have not shut up this whole time. I'm just kidding. I'm just joking. You're muting your microphone, but you're still putting your hand up. Happy birthday. Anyways, the 320 point basis decline was kind of expected. Direct to consumer, that's been taking their focus off the in-store stuff where the consumer is. They're trying to get back to where the consumer is. So nice revenue increase. That was a surprise. I wish it was better, but we're still in the middle of the turnaround period right now. But it also shows that so the focus of their win now strategy is rebuilding the wholesale. So that's starting to turn around. So seeing the profit margin decrease a little bit in order to try to regain some market share, that will hopefully be the trade-off. But go ahead, Dave. Sorry.
Do they do this every quarter with excess inventory of things that just didn't sell? Do they just discount them tremendously just to move them along? Is
I
this a
mean,
regular quarterly thing?
I mean, almost every retailer does that to some effect, but this is bigger for Nike right now.
Yeah, that was a big number. You were saying it made up 3% of revenue or a gross
Somewhere, it was
margin
probably
drop?
somewhere around there. It
Like
was
their
yeah,
gross margin dropped 3%
yeah,
overall
it
due to
was.
just clearing out excess inventory stuff that wasn't
Yeah,
selling.
but then also the direct to consumer was a higher margin business, but it was losing market share. So the gross margin looked nice, but the volume was dropping dramatically in ways that didn't make up for that at all.
So they're
So
redoing their strategy. In order to do that, they're going to take a hit to gross margin in order to
right.
grow their revenue and profit. Is that what I'm hearing?
Prior prior we were looking at like 45 to 46% gross margin with the direct to consumer business being the focus, but losing market share. Now we're looking at over the course of time, it's dropped to about 40 to 41%. We're probably going to stay at about 40%, hopefully,
Gotcha.
and
Okay.
not go too much below that. But I am thinking that there's a trade-off here, right? You're trading some of your gross margin off to regain some of the market share. Another focus on the win now for them was running. I think that saw an increase of about 20% for the quarter. So that's another earlier indicator of success here for running. China was still a massive weakness. China's sales revenue declined 9%. It was systematic across all channels. Nike Direct fell 12%, wholesale declined 9%, and earnings before interest and taxes in the region declined by 25%. So Nike still getting a Chinese rebellion here and a lot of competition popping up in China for Nike. Plus, there's probably some anti-American sentiment. So
What about their athletic shoes? Not the athletic leisure shoes, the because Nike's done well in recent years with that, but actual workout shoes. Because I gave the example, what was it, last week or the week before? I don't own a pair of Nikes for any of my workout sports. I have all other brands for running, for cross training, for working out. I don't own Nikes.
I didn't see anything else other than running. And that popped out to me in the report. 20% increase in running. So,
So they are trying to gain market share back
right, and running
from
was one of the
Hoka's and so on and so forth, and
right,
Pumas
right.
and yes.
So that's the upward surprise here. There's nothing eye-popping on this in either direction. It's just kind of a run-of-the-mill generic earnings report of a company that's in the middle of a turnaround, and there's some signs of strength here, some signs of weakness. So if you already own it, if you followed me into the stock, I'm not selling here, but I'm not necessarily screaming buy at this point either.
I'm skeptical. I'm not saying buy or sell either. I'm just skeptically watching and Brett, I see too much more competition. I don't see anything new and exciting coming out of Nike ever since they came out. What was it? The Air Force Ones that in all those different colors and styles that everybody could own.
Yeah,
Is that the shoe I'm talking? Did I have the right shoe? I know
I
I'm
don't
not
know. They
cool.
made a
I'm
rap
not
song
pop. I'm
about it.
not cool. I don't know, but it's the one that you see on everybody's feet in different colors. That one really
Well,
blew up for Nike, and it was a great revenue driver for them. But what have they done since then?
they're really putting a lot of focus on the Jordans. There's a decent amount of
That's it was Jordans. Yeah,
yeah,
it was Jordan, not Air Force One. I got the wrong
Jumpman
shoe.
Air the well, I mean Air
I'm
Force
gonna I'm
One.
gonna get DMs about this now saying, "Hey, you don't know your shoes." Yeah, I don't
Well, Air
own
Force
Nikes.
One
I
was
don't own
popular at
Nikes. I
Nike
don't
too.
care. I
Yeah,
don't care.
They're all Nike. But I mean this is a bet on brand equity, essentially.
I now
Turn
Nike
it around.
clothing
And
is doing well.
apparel actually was a nice surprise on the upside as well.
Yeah. Nike
So
clothing
yeah,
apparel is doing well. That's
right,
that's the that's the bright spot for Nike
right.
is apparel. That's the bright spot. But like they're known for their shoes. Like if you don't have good shoes or something to sell shoe wise, is apparel eventually going to take a hit?
No, I don't think an apparel will take a hit because of that. But the rest of the business obviously will, because the rest of the business is shoes. So yeah, I no, I think if you buy it, if you bought it, you followed me into it right now. You just hold it, and I think you'll have decent returns. But I do think that there's other better opportunities out there, possibly if you haven't bought into Nike yet.
Let me ask you this, and it's because I just recently made the mistake of bullish. All right. And I
Mhm.
want to make sure that that everybody else doesn't make that same mistake I just made. Learn from your mistakes, right?
Yeah.
Are you holding because you don't want to admit that it was a bad bet, or are you truly holding because you see some actual microeconomic fundamental news here?
No, I'm truly holding right now because the turnaround is still in play, and there's no evidence to tell me that it's not yet in the earnings. Until I see it in the earnings that the turnaround is, you know, running much further behind than expected, or that it's been knocked off path and that their strategy is bad, then I will sell. But right now, this was neither confirmation or denial of that, if that makes sense.
Yes, it does.
Plus, their balance sheet still looks good. The free cash flow's okay. The depth is good. There's no problems with depth here. They're not gonna have any issues with bankruptcy, nothing like that. There's all of that is not even in the conversation right now. So they have
Gotcha.
good leverage to bounce back, and with the brand equity, and a strong fortress, solid balance sheet, they should be able to do it.
Did you say strong fortress?
Strong fortress balance sheet. Yeah, I mean, they've got a good, decent fortress.
I like the analogy there. It's a
Yeah,
strong fortress of a balance sheet.
it is because they're not going to go underwater. You know what I mean? They've got enough to work
You got
with and to
enough
pivot
moat?
as they need. So it's a brand moat. It's a brand moat. It's not, not a monopoly. Obviously, they've got the Hokas and a lot of strong competition here, but the name Nike
Yeah,
is the moat.
gotcha.
So
All right. What else you got, man?
Campbell soup. I'm actually going to buy into
Campbell
Campbell
soup. And
soup.
are we talking
Yeah.
about the painting or are we actually talking about Campbell soup here?
No, no, I'm not. I'm not talking about Andy Warhol. But so if you're not familiar with Campbell's Soup, I don't know. This company's been around since like 1867. But if you
You
if you
lived a
don't
very nice life.
if you don't remember, Dave, I mean, do you remember when this company was founded?
Nice. Ouch, that burns. Thanks, man. Thanks. I appreciate it. That was good. That was good. You're gonna make me cry.
If you don't
Yes,
remember
back
when
in the
if
day.
well, okay, good, because if you don't remember, then Pepperidge Farm remembers. Pepperidge Farm is one of their brands. All right. So they own Pepperidge Farm, Goldfish, Snyder's of Hanover, Pace, Prego, Swanson. They've got over 50% of the soup aisle in most grocery markets, grocery stores. So again, this is another highly competitive business here, but with a brand name equity style moat to it. Um,
Gotcha.
they've got cost advantages, so they have increased costs here. Not fast enough, unfortunately, to combat margin declines based on tariffs and supply chain difficulties, which is why the stock's down as much as it is. And there's good reasons for that stock to come down, but it's came down a little bit too much, in my opinion. Um, what their strategy right now, and this is the reason why I'm buying the stock. They had essentially the goal previous to this was saying, hey, we're going to save $250 million in supply chain costs using artificial intelligence. And I think they said this somewhere around last year that this is going to be $250 million in savings by 2028. That's already on track. In fact, it's more on track than they expected it to in this quarter. Recent quarter that they reported, they upped that by 50%. They said that actually we're on track now to save about 350 million. Or 375 million in supply chain cost savings. So this isn't just something that the CEO threw out there. This is something that's already in effect and they're already beating their own goals on it. And now, if you're pulling up price to earnings ratio on your Robinhood or Schwab or Fidelity app or whatever you're looking right now, on Campbell's Soup, if you're looking at that, then you're looking at the price to earnings ratio right now shows about 15, which seems high for a company that's aiming for 1 to 2% sales growth every year. Um, but here's the reason. So did the calculations here, did use artificial intelligence to help me because I can do that now and it's awesome. Um, if they do save the 370, if the stock price was to stay the same and they implemented the $375 million, that was on track. They saved that money. The price to earnings ratio would then come down to 8. So to me, that tells me that the stock needs to continue to go higher as long as that $375 million goal is reached or even exceeded.
Hmm.
Um,
And this is all due to AI.
right. And so this has been tariffs, by the way, that have driven the stock price down. It's been tariffs, it's been higher supply chain costs. They did say that they're aiming to mitigate about 60% of the tariff costs. Meaning that they will make up for that with cost adjustments or price increases or cost savings. 60% of it will be made up for. So I think that the price decline that you've seen this year and going into this year, you're buying Campbell soup at like almost like 2019 prices right now. It's been a really bad time for the stock, and I think just right now is a good time to pick it up and hold it for long term. It may continue to be a user or a loser for the next month or two, just based on downward momentum. But I think over the course of the next couple of years, you're going to be happy that you bought it at this price.
Do they
Factor in the
pay a
fact that
dividend?
the dividend right now is close to 5%.
Oh, nice. That's a nice
So
dividend.
yeah,
5%.
right.
I like that.
So that's my thesis on Campbell Soup buying because of the brand equity and because the cost savings that they're planning on and seem to be on track to complete by 2028 means
They
this
get a
company
boost
right
in the
now.
winter too in the United States.
Yeah,
In the winter United States, there's a big boost in soup sales, and it's something culturally we have in the United States. Every winter, everybody wants to buy soups. You get the cold and flu season, chicken noodle. You start seeing 4 packs of chicken noodle everywhere.
right,
You get the tomato soups. Everybody wants grilled cheese and tomato soup for a light dinner some nights, and it's a cultural thing we do in the United States, and that always seems to be a boon for Campbell's.
right. And even with a company like Campbell Soup that's been around for this long and is in no danger of going bankrupt anytime soon, 1 to 2% sales growth of a conglomerate. I would still be looking at a price to earnings ratio of 8% generally and saying I want that down actually really closer to about 5 or maybe even less. Um,
As would
but the
I. That's
fact
kind of high. You said 15 right now?
it's at 15 right now with the cost savings. It looks a little bit cheaper if they're actually able to achieve that. Plus, factor in the 5% dividend. That means I'm calling this a buy.
Gotcha. Makes sense.
Yeah. So to me, to me it looks like most of the cost of the tariffs, most of the cost of the supply chain, those situations seem to be temporary. Some of it's going to stick, but not as much as what the market's thinking, I don't believe.
There you go. And that seems to be the story in a lot of companies.
Right,
Temporary, some are even using one-time costs. None of it's as bad as everybody thought.
right.
And that's been the
Plus,
story all along.
now when CNBC comes back to screaming and crying, "Ooh, market rotation!" Now you've got a dividend king, and you can sell it when that spikes because of CNBC's goofiness.
I'm telling you, I like the news channel, the stock news channels. They do give real-time news in real time.
I
Yes.
agree.
But are
Yeah,
they talking heads and sometimes talk out the other side of their,
ratings.
yes,
Yeah.
yes,
Yeah, are
100%.
they overemphasizing this government shutdown like they do every
Everything else.
single time that we ever have a government shutdown and it
Yes.
never really negative impacts most people?
Yes.
Yeah.
All right. Moving on. I'm going to talk about one that the PE ratio is slightly different than the one you just talked about.
Okay.
Um, The company I'm talking about, Brandon, has a PE ratio of 146,
Woo.
and
Okay.
I think it's a buy.
Okay. Well, I
This
mean,
is
I got Palantir in my portfolio, so I have no room to talk about.
this is why PE ratios are a good tool, but they're one piece of a puzzle, and this is why I
Right.
say that. Gotta look at the whole picture. So the company I'm going to talk about here is GE Vernova. So it caught my eye this past week when it took a big dip down. It was trading right around 620, 630. It ended the week at 594. And I'm like, what's going on in GE Vernova's world? What is happening? Well, it came out that RBC went ahead and said that, hey, let's downgrade GE Vernova. We got a price target now below 600. And so that just, sent the stock down, and plus what they said. So RBC Capital went ahead and said that GE Vernova, all the power grid, data center growth, everything is priced into the stock, and that the stock is priced fairly right where it's at. They don't have a sell, they have a hold on it. They're holding, but they don't believe they're going to see any meaningful growth within the next 1 to 2 years. That's from RBC Capital. I disagree with them. Here's what I'm going to read some stuff from some articles here, and then we're going to talk about some more of the actual business, Brandon. So RBC Capital Markets recently downgraded GE Vernova, citing concerns about the stock's current valuation and challenges in its wind business. The shift is catching the attention of investors watching sector momentum.
Yeah.
Um, Despite the more cautious outlook from analysts, a recent dip in the sector sentiment, GE Vernova's recent news cycles include a new quarterly dividend, brand new, and ongoing electrification initiatives, a spotlight appearance at the AI for Electric Sector Summit. The stock's total shareholder return over the last year just sits just above 1%, reflecting a period where momentum has cooled and the market weighs long-term growth. I believe that's incorrect because I have a 1 year chart up. It might be talking. I don't know where they're getting that number from this article here, but that is incorrect. If shifting trends in power and renewables have, so it goes on to talk about GE Vernova. I'm not going to read the rest of that. Um, Fair value estimates point GE Vernova to being undervalued. The company's current price to earnings ratio stands at 142. I said 146. It's significantly higher both than the electrical industry average at 29. It's not technically just in the electrical industry. It does nuclear power as well. I've covered this on the show when I called it a buy below $200 a share. And at $300 a share, I said it was a buy because it's moving into nuclear power and small nuclear power plants that can be built right next to data centers. This is
Right.
why I said it was great, right?
Right. And
Um,
they've been moving some of their focus off of wind, which is I flagged that as a headwind when I did our initial company profile on GE before the stock split, that wind was a problem because it's high margin, low return.
yes,
Or not high margin, low margin, low return. Uh,
right.
there's a lot of cost to it, but they've been shifting some of the focuses off of renewables and moving it over to what you just mentioned, gas and natural gas and nuclear.
Which
And
is the future right now in
right,
America.
right. Which is why I changed my thesis on it because initially this is the company that I was going to drop as soon as the split happened.
Yep.
But now we're saying it's buy, and I agree.
And well, let me give you this some more. So that was RBC Capital, but that was not the only company that reported adjusting price targets on GE Vernova. Deutsche Bank, who I actually like better than RBC, and I'm not just being biased here in the moment. They adjust their price target on GE Vernova to $724 from $694. So well above where they're at right now. They maintain the buy rating on it. The actual as a whole, the average rating of the average sorry. GE Vernova has an average rating of overweight and
Right,
a mean price target of 686.46 according to all analysts that were polled by FactSet. So analysts in general, Brandon, are saying that they're overweight on GE Vernova. They're maintaining overweight, and the average price target 686, which is above where it's at right now. It's over a 10% move from where it's at right
Mhm.
now. Also, this past week on Friday, Verizon Business Partners, they announced a deal with GE Vernova to partner up on its network to modernize its grid services to businesses. So that was a deal that was announced on Friday. That was after RBC had said that they were overvalued or fair valued, if you will, fair valued, if and didn't see any meaningful growth. So there are growth opportunities here for GE Vernova. The dividend is new. It's only a 0.165% dividend. You're not going to make a lot of money with that dividend at all, but that is something that is new. I would rather see them use that money for other things than
Me
pay a
too.
dividend. But hey, a dividend's a dividend, right? You're going to get that dividend payment in actually here soon in October 20th is the first dividend payment coming out for that. I have the 1 year chart of GE Vernova up. So 1 year ago at this time, GE Vernova was at $260 a share. So it's had a nice big run up that's over doubling in share price due to the interest in the power grid data centers, so on and so forth, that we covered last year at this time. When Brandon was talking about data centers, he brought it up before the big rush into it, by the way. I will mention that. Thank you, Brandon. You really covered that before the overall market,
Thank
CNBC,
you.
Bloomberg, all those companies even mentioned it on their shows. You heard it here first on Chinchilla Pickin'. But G Vernovo, I still believe in the company. I believe it has a strong future. I'm looking at this from a fundamental economic standpoint because I made the mistake with bullish, believing too much in the company and the without any hard data to back it up. This one, I see too many deals being signed. I believe in the hard data. I believe it's going to pay off even more in the long term, especially as we need more and more data centers and especially as AI continues to grow.
I agree. 100%.
There you go. Brandon
There's a lot of
agrees.
opportunity here. So, and anytime you have a big analyst like RBC question a valuation of a company that's got a high PE ratio, there's going to be a pullback on it
Well, you
because
know
you're going
who
to
else had a
see
high
clout.
PE ratio and people have questioned it, but we continue to back it on the show? NVIDIA.
Mhm.
When you called NVIDIA a buy at 120, everybody said it's at all-time highs. Doesn't need to go any higher. NVIDIA
And
hit 190 this
and
past week.
and the reason for that's the same reason why we're pushing GE Vernova as a buy. It's because this new artificial intelligence and electrification revolution inside the United States that is just now beginning.
Right. And as we continue to grow the electric vehicle market, they're going to need more and more and more power. GE Vernova is a great play in this market. So is Tesla. Tesla makes a
Mhm.
majority of all charging stations in the United States are made by Tesla. That's a
Right,
great play if you're looking for a power grid play.
right.
They also own Tesla makes a lot of solar panels across people's houses and businesses. Great play for that.
Yep.
All right, so I want to talk about something that had a record high this on Sunday. That's today, because this article came out this morning. Record high overnight, Brandon, and has been a something where where businesses and governments have been putting money as a safe haven that you completely hate that it's being used as a safe haven. That you just are like, well, every time I bring it up on the show, you're like, this is not a safe
It's
haven.
not a
Why
safe
it's not a
haven.
safe
There's too
haven?
much risk in it to be called a safe haven.
So
Even
let
if
me tell
they're
everybody else
even
what
if
it is
you're on
first.
the upside on this, there's too much
Let
risk.
let me say what it is first before you start just trashing it. Bitcoin is what I'm talking about. Bitcoin went well above 125,000 a coin just overnight last night, and it continues its rise up. Brandon, go ahead and start your
I'm not
trashing.
trashing Bitcoin. I'm trashing the people that say well, not you. I'm
I say
trashing
it's a safe haven. You
companies
could disagree with me. It's
that
fine.
use it as a safe haven. What do you say in the stock market? High risk, high growth potential, right? I mean, it's high risk, high reward. That's the deal. Like if you've got a decent amount of potential reward here, there's a risk to it. This isn't gold that's been a proven store of value for hundreds of years now. It's not even treasuries, which have been proven store of values for about 100 years now. It's not that. It's been around like 16 years. This is still new. You're staking your entire company's debt, leverage, and financial situation on Bitcoin, and I don't agree with that.
Something for 16 years has consistently gone up,
And down very
but
quickly.
always up. If you look at a chart, all-time chart from left to right, it goes from the bottom left to top right. You couldn't
It's
ask
not.
for a better
It's
chart. You
not
couldn't
the.
ask for a better chart.
Yeah, but I mean,
And
these
I go
companies are
back, I go
buying
back
in
to
now as a store of value for their own financial futures. And the fact of the matter is a severe recession in the next year could push it down 50%. That doesn't mean
it's
it's
a
going to
buying
go away or that it
opportunity if
won't
it
come
goes
back
down
up.
50%, but it's
It,
it's it's not going to
sure,
go down
it is.
50% in a
But
recession.
in a recession, it might.
No, it won't.
That's what's
Because
happened in the past.
it
It's dropped that far before when we've had recession probabilities. A technical recession of 2022
it's
been that good
it's
for Bitcoin.
it's dropped that fast before when the high that it hit, the all-time high it hit was around 40,000 or
Right,
24,000.
right.
It has never dropped that high ever since it crossed 80,000.
Okay.
It has never dropped 50% ever since it crossed 80,000 or 100,000. The higher it moves, the harder it is for it to drop 50% at one time. And especially as more and more governments own it and more corporations own it, that means a large position of this is actually owned and held by large countries and corporations. Which means it's just going to be held and held and held as a safe haven to put some money. And the more
What
that it's
do you
held, the
mean
higher
safe
the price
haven like
goes.
that? It's not safe enough to consider a safe haven yet.
It is.
No,
It is be
I really don't think so.
It is
It's not
because
no
of who
risk.
owns it and that the fact no one's going to sell it.
We don't know that.
We don't know. Maybe they all sell at once, but
But
then
we
who's
can
going to
tell
buy
you,
it?
we can say that about gold because we've got example after example after example after example
What
after
if everybody sells their
example.
gold all at once? What are you going to do then?
They're not gonna because I mean, they never
So
do.
they're not going. That's not an answer, and you know that's not an answer. That's not an answer I'm willing to accept on this show for our listeners. Not gonna is not
Based
going to
on
work.
hundreds of years of history versus the little over a decade
You know
that
what I heard back in 2005? Houses always go up. It's the safest bet you can ever make.
right.
What happened in 2008?
That's my point. You're
I'm
making
just saying
a
you're
point that
you're you're saying the same thing. Look, we could talk in
no,
circles all day long.
that,
Everybody on
that,
this, if you've listened to our podcast for at least 6 months to a year, you've heard Brandon and I argue about this time and time and time again. We're gonna continue to argue about this. My opinion is Bitcoin can be used as a
so
safe haven. His
let
is
me
not.
here's a good example that you just brought up the housing market. Houses right now are much further higher value than what they were in 2025. But a lot of companies and a lot of financial institutions were using real estate as a safe haven. And then
Correct.
2029 or 2009, well, not 2009, 2008, when the housing market dropped, that's when all those companies started going bankrupt and having a lot of issues.
No, so the banks went no, don't say that because that's not true. The banks went bankrupt because of bad subprime loans, giving loans to anybody with
Yeah,
no
and
with high
asset
risk investments, people who didn't have income, didn't have any job, you know.
and assets that were derived off of the value of the reset of the resale of the homes.
There was a lot more to it than what you're oversimplifying it to the point that it's extremely argumentative and a straw man argument. I'm going to call you on that.
What a straw man argument.
So, but
Asset-backed derivatives are part of the reason why the stock market failed and the housing
But
market
there's that's
in
not why
2008.
Bitcoin is will ever go down like the housing market did. Bitcoin is a good safe haven to have. It's gonna continue to go up over time.
It's not without its much greater risks than gold. or
All right,
treasury.
so now it's
You know,
much greater
treasuries
risk
right
than
now with the
gold.
government shutdown, everybody's screaming,
Yes,
"Figure
yes, it
your
has a higher
costs."
risk than gold, but it also has a higher reward than gold.
This is true, absolutely. Which is why I'm not trashing Bitcoin.
Okay.
But I think they're being too risky here. I'd rather buy Japan treasuries, which just hit multi-year highs, buy Bitcoin for a safe haven. Now, if they want to put it into their other bets category, like Google might do, then that's fine. But as a safe haven, it's too risky for me.
Gotcha. Gotcha. All right. I got one more thing covered before we get into final thoughts. So let me get into this real quick. We're never going to agree on Bitcoin. Let's just agree to disagree
Right.
here. All right. AI Sam Altman. This is the headline. AI Sam Altman and the Sora copyright gamble. Right? So what is this? What am I talking about? So OpenAI launched short form video app Sora this week, Sora, Sora, and users have flooded the platform with artificial intelligence generated clips of popular brands and animated characters. So the worry and the concern here is the startup could soon face a deluge of copyright lawsuits.
Okay.
A quote from Mark Lemmy, a professor at Stanford Law School, said in an interview, "A lot of videos that people are going to generate of these cartoon characters are going to infringe copyright. OpenAI is opening itself up to quite a lot of copyright lawsuits by doing this. So it allows you to go on there basically, and I could use SpongeBob SquarePants voice and make videos with that, or even
So,
cartoons and make AI cartoons using SquarePants." As an example, Rick and Morty, South Park, Despicable Me, you could go anywhere with this, right? So these have been used. There's even one video showing OpenAI CEO Sam Altman standing in a field with several Pokemon characters where he says, "I hope Nintendo doesn't sue us." And that is AI generated. There's another one that shows a fictional McDonald's mascot, Ronald McDonald, fleeing from a police in a car shaped like a burger. These are all AI created videos using Sora's app.
okay.
McDonald's declined to comment on the news and the attention being brought in here, but and everybody's eager to get on there and mess with the Sora app and do all these fun things. Disney Universal have sued the AI image
I
creator.
knew it. I
Hold
knew this
on.
was coming. Go ahead.
Hold on. They have not sued OpenAI yet,
Okay.
but they have sued the AI image creator Midjourney, alleging the company improperly used and distributed AI generated characters from their movies. Disney also has sent a cease and desist letter to Character.ai last week, warning that startup to stop using its copyrighted characters without authorization. However, Disney has yet to comment or we have known about any lawsuit or paperwork sent to OpenAI about their Sora app.
Okay.
I'm wondering why. Characters are copyrightable, meaning third parties cannot use copyrighted original characters without permission. And Sora is primed to be a fresh breeding ground for infringement disputes. Um, so they go on, they talk about this different things, but here's what OpenAI has to say. OpenAI says it respects takedown requests that are submitted through its copyright disputes form, which allows content owners to flag specific content. Users can also report videos for copyright infringement and trademark infringement directly through the app. However, the argument against this is, I'm trying to find it here. Dun, dun, dun. Where is it at? Someone worded it so nicely, and I love the way they worded it. Um, oh man, I'm trying to find it. I can't find it here, so I'm just going to read what this has to say. That kind of argument would be unusual, according to Jason Bloom, partner and chair of intellectual property litigation practice group at the law firm Haynes Boone. Typically, third parties have to get explicit permission to use somebody's work under copyright law. You can't just post a notice to the public saying we're going to use everybody's work unless you tell us not to. That's not how copyright works. So OpenAI has opened himself up to lots of lawsuits. Brandon, go ahead.
Yeah, and Disney once had a copyright on the Happy Birthday song, which is absolutely ridiculous. Just ridiculous. It's crazy stupid. Um, I'm sure there's going to be a lot of litigation surrounding this. If I was Disney, I would just be looking for people who are portraying my characters and creations in ways that I didn't want them to be portrayed, or in ways that makes it look like it comes from Disney when it really doesn't. But fan art can do nothing but advertise for you. So I think they need to change their position on this.
We're gonna see. The app went live last week. We'll see what happens. It's only been one
It
week.
it makes your stuff more relevant.
I'm pretty sure Disney's got a letter and a lawyer ready to go.
Absolutely, they're probably already looking into it. It's probably already in the process.
They're probably yeah, they're probably already filing it. They got a
Yeah,
judge they paid off ready to go.
right.
Crazy, 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 crazy. All right. Final thoughts, Brandon.
Definitely say Campbell soup's a buy. I wouldn't scream about it. I'm not super excited about
You're
it. Campbell
screaming about it.
soup.
You're screaming.
Yeah, it's not that exciting, but it's a buy. I'm buying into it tomorrow. I'm not gonna go like crazy with it, but definitely buying into it. And yeah, that's I mean, really like we had a slow market week this week and the week prior. So I'm just kind of waiting on the headwinds. I know somebody from JP Morgan said they're waiting on a pullback in the next 12 months. So what? 10% pullbacks happen every year. Big deal.
You sound like me now. You sound like
Right.
me.
Right. So, I mean, yeah, he said that the markets are overstretched, and even one person saying that's not a reason to not buy a company. So, yes, JP Morgan said that they're looking for a pullback in stocks. But guess what? I still think Campbell's is a value right now. So I'm buying it regardless. So
There you go.
it's an overall macroeconomic commentary, right? It doesn't mean that the stocks that you're looking at are bad.
Yes, it's true.
Yeah.
It's true. All right, final thoughts real quick. Two earnings coming up this week that I'm looking at. First is Delta Airlines. They should beat. The news has been pretty positive all quarter long on Delta Airlines. Second, Brandon, I want your thoughts on this because you said that this is a turnaround play on this company. Pepsi is reporting before the bell. Pepsi, however, analysts are saying that they actually should be not beaten. They actually should be lower and but not horrible lower, just barely lower than estimates, citing tariffs and lower demand overall. Is that lower demand due to weight loss drugs? First thoughts, Brandon?
Probably that. Supply chain issues as well, tariffs,
All
things
right.
like that that'll affect Pepsi. And, I made a mistake because I thought that their supply chain plan a couple of years ago was good, but it turned out to be absolutely terrible. And, they got pulled off of some very large supermarket shelves over in Europe because of their pricing. They need to fix their relationship with their wholesale suppliers and with their retail companies. And hopefully they can move up from there. They're in a good position to make a turnaround. They just have to do it.
Right, they do. I disagree. I think Pepsi has lost the battle. I think they need to do more changes
Right.
to actually complete a turnaround. More changes is what I'm looking for in that company overall to their whole offerings. It's all too saturated in Flamin' Hot and Doritos and chips and all these things that are they need to find a healthier brand or change what's in their chips, if you will, and snacks. Uh, Bitcoin is currently at 122,000 right now. It has already dropped from the high, Brandon, just so you know. But that's a daily move of Bitcoin happens every day.
That's why I
How,
say it's not a good use as a safe haven.
anyways, moving forward, with Bitcoin still hovering above 120,000, and I see it over the long term going even higher. Coinbase is always something to take a look at, but Coinbase is at all-time high 378. Well, not all-time high, but a very large high. That's definitely one to keep an eye on. I don't see Coinbase moving too much higher, but it should help with a ETF dividend company that I own, Coney, is the ETF I own quite a lot of shares in. Be very happy to see a bump on Monday morning with that based off the Bitcoin news. So
Sure.
that's all I got. We thank you guys for listening. Please hit the subscribe button. As always, tell your friends and family. As we hope to be entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.